Now, today's episode is around Bitcoin ETFs. So, looking back at the numbers over like the last year or so since they've been live, they've done over $1 trillion in cumulative volume, and they now hold $164 billion in assets. How would you categorize or define that success?
I think it's a tremendous success for the industry, and the words cannot really summarize how successful Bitcoin ETF launches have been so far. Right, you've seen all the headlines. Bitcoin ETFs are the most successful ETFs launched in history, and it's absolutely true. Right, they're shattering records, both from a trading volume perspective, as you mentioned, Tim, from an asset accumulation perspective, but more importantly, from our perspective, from our side at 21Shares, from a client adoption perspective as well. I think we've seen all sorts of different types of clients coming into the market, and that's partially what's fueling all the growth that we've seen in the first, let's call it, 18 months of these products.
Sure. Can you tell me about like broadly about the sort of clients that are most interested in these sorts of products and maybe any that hadn't previously been involved in crypto before this?
Absolutely, absolutely, and I'll be very focused here on the U.S. market. The truth is, all client types in the U.S. are focused on Bitcoin today, and I think the performance is one of the main reasons that you can't really ignore the asset class anymore. We subdivide the U.S. market into three broad buckets: retail investors, financial advisors who are professional money managers managing the assets of other end investors, and then institutions. With retail, I think it's been widely documented that they've been leading the way when it comes to Bitcoin ETFs in the US. We estimate they hold around 50 to 60% of the total assets, and they're continuing to buy in bulk, right, as we've seen through the flows into these products. More interestingly to me, and what I think has really been changing in 2025 versus last year, are the growth of financial advisors in this market. And I think it's really driven by two of those things. One is these ETFs crossed the year mark in January 25 without a single hiccup, right, and operating exactly as they were prescribed to do so. And so that year-long metric for financial advisors here is a really important number, just to make sure that they're allocating their investors' money in a fiduciary way in a lot of cases. And the second reason is really performance, right? It's a hard to ignore asset when it's delivering double-digit growth on a yearly or every 6 months basis, right? Um, to give you an example, Rick Edelman is one of the most famous and followed financial advisors in the country, managing billions and billions and billions of dollars on behalf of other investors. And recently, he came out saying that allocation should be targeted between 10 to 40% of our total portfolio for Bitcoin. Now, that's not appropriate for everybody, given different risk tolerances. But at the end of the day, that's a big endorsement by one of the most sought or coveted investors in the country. The last group here that I'll touch on are really institutional investors and governments. To us, this is really where we're seeing Bitcoin at an institutional level being gathered by the billions as well. I'll include corporates out here that are necessarily using ETFs but are buying Bitcoin on their balance sheet. This includes firms like MicroStrategy and Japan's MetaPlanet, France's Blockchain Group, the list goes on. But at 21Shares, we've seen or we're tracking over 150 different public and private companies that are holding Bitcoin on their balance sheet now, representing over 120 billion of additional AUM coming from this market alone. And that's a trend that's accelerating rapidly because capital markets are clearly rewarding companies that are holding Bitcoin on their balance sheet with equity price growth for these firms. The
Yeah.
last two here, when it comes to institutions, are really governments and hedge funds. They're both in very different stages of their adoption cycle. Governments are beginning to participate in this market, and I'm including pensions in there. They're really just dabbling and getting their feet wet, but they're beginning to evaluate what it would look like to add Bitcoin to their holdings. And then hedge funds around the world, which are avid users of Bitcoin ETFs and are amongst the most sophisticated crypto investors to date.
Yeah. I wanted to ask about the hedge funds. How much is the basis trade driving volumes and AUM?
Oh, a tremendous amount. I mean, it's hard to ignore, and especially the strategy employed by hedge funds. For those who may not know, they short the futures and go long the spot, and it's essentially a way where they, on a risk-free basis, can generate some yield off of these products. And that, as we see the basis expand, so the bigger the delta is between the spot and the futures prices, the more hedge fund money is coming into the ecosystem. And so it's certainly a big proponent of hedge fund flows now.
Okay. And what are the main things you've learned from investor behavior so far?
Look, I think the biggest thing we've learned is more and more investors are looking to allocate to Bitcoin, right? And these are long-term sticky investors that are not necessarily day trading or looking at the price of Bitcoin every hour or every day. These are investors that are making strategic long-term allocations into the asset class, and they're using the ETFs as a way that provides them safe, low cost, and regulated access to the market in a really convenient way, right? The benefit of the ETF is that now you can access Bitcoin and other assets down the road in a way where you're familiar with investing, right? You can go on Robinhood, invest in the ETFs. You can go on Schwab. You can go through to your financial advisor and have them add to your professionally managed portfolio. And so it's a very convenient and comfortable way for individuals to get exposure. And we're seeing long-term allocations because of that.
Okay. And how successful have options been on top of these ETFs?
I think we've seen a healthy options market, especially for a handful of the ETFs. It's not as widely used, obviously, as the long-term allocations that we're seeing in the spot products themselves. But for different investors, there's certainly a great advantage and a great tool to get differentiated returns related to the Bitcoin market.
Do you think these products will uh, sort of take a lot of trading volumes from your sort of standard crypto, spot crypto and futures exchanges over time?
I do think so, but I think the pie is certainly big enough for everybody to participate there in a healthy way. I think they also cater to different types of investors, right? If you're a very crypto native investor and you prefer to manage your wallet independently and you understand how to use keys and cold storage and you can manage that in a safe way, then potentially going direct is a great option for you. But for the majority of investors that are not as crypto native and don't necessarily understand that landscape as well, the ETFs provide the single one-click solution that makes it as convenient as possible. In our case, charging just around 21 basis points. So it's very, very cost effective as well.
Yeah. How are RIAs and wealth managers approaching these products now they're live? Would you say like are they going quite aggressive on them, or is it still quite early?
I think it's quite early, and I would say the majority of wealth platforms across the country, whether they're RIAs, wirehouses, independents, all of these are different structures for financial advisors. They're all beginning to explore what it would look like to add them to their platform. We've seen some platforms take the early lead, right? When I think about Morgan Stanley as a wirehouse, they've approved the use of some Bitcoin ETFs for solicited transactions. But then others are still going through their due diligence processes, which are quite lengthy and thorough, as they should be. These are professional money managers that are investing on behalf of others. And so they make sure that these products, like I mentioned at the top, are operating in a way that is appropriate for what their clients are looking for. They often compare one product to another. So they'll look at AUMs, they'll look at spreads on the product, they'll look at fees, they'll look at trading volumes just to make sure that whatever happens from their allocation, they're able to actually navigate the market in a low cost and effective way. And that's where we think our product at 21 Shares does pretty well.
Do you think Vanguard will be forced into the crypto ETF game at some point?
Look, it's pure speculation when I think about Vanguard here. They certainly have not been a first mover, if you want to put it that way. Ultimately, I think Bitcoin will become mainstream enough that I think every platform across the country will have to do so, just from a client retention perspective, right? At the end of the day, the D2C platforms, and again, this is just my personal view now, but D2C platforms want to continue driving user growth and account opening growth. And so you want to prevent your investors from going elsewhere to access markets that you're not providing access to. And so over time, we could see a shift. I think there's certainly no rush for Vanguard. They're able to add these products on platform whenever they would feel like. And it's something that could come down the road. But for now, we're certainly seeing the other D2C platforms like Schwab and Fidelity, Robinhood, et cetera, embrace the asset class.
Yeah, and you've had a really interesting like career sort of ETF wise because you were at BlackRock when they launched the first Bitcoin ETF, and then you moved to 21 Shares. What was it like back then at BlackRock when they were sort of innovating in this way, which is obviously a quite a hard and surprising thing for a company of that size to do? Like, was there sort of a lot of excitement around the launch of these new products?
Oh my gosh, it was tremendous, and it was one of those moments where I think as a firm, uh, and I don't want to speak too much now about BlackRock, but as a firm, BlackRock recognized when that moment shifted of understanding what the asset value proposition was, and really rallying the organization around how to launch these products and how to make them come to market. For those who may not be as familiar with 21Shares, we're a global crypto asset manager specialized exclusively in this asset class. And we have the largest crypto ETP platform globally with over 55 products and about 12 billion in global assets as of yesterday. Our product suite and really what enticed me about joining a firm like 21Shares is our product suite, provides access to 30 different crypto assets. It's not just Bitcoin and Ethereum for us. We're really specialists through and through when it comes to the entire crypto universe. And for me personally, joining a firm like 21Shares that was focused on being on that cutting edge of product innovation at that intersection of crypto and ETPs was an opportunity that I couldn't necessarily pass up. I met the founders, Hani and Ophelia, a while back now, and fell in love with the mission that they set out to accomplish from the very early days. The first crypto ETF 21Shares issued was in 2017, 2018 out of Europe. And since then, like I mentioned earlier, we've grown to 55 global products covering clients from the US to Europe to Australia, you name it. And we're certainly adding more to our repertoire. So for us, it's really a story about innovation and staying at the forefront of crypto and making sure that we're providing investors in all these geographies a really crypto native company that is a specialist in what we do. And when I say we eat, breathe, and live crypto, it's not an understatement. That is our true ethos at 21Shares.
Yeah. And with a lot of those products, what we've seen is lower sort of volumes generally outside the US, whether that's Europe, Hong Kong. Um, but you guys have launched a lot of different products, Dogecoin ETPs, staking products. What happens when these start coming to the US market?
I mean, look, I typically use Europe as a good barometer for what we can expect in the US down the road. We were fortunate enough to have that experience of seeing how the European market initially started with a handful of assets and then grew to this diverse, broad ranging, ecosystem as you described him. Um, so we certainly are seeing demand for non-Bitcoin, non-Ethereum products in Europe. Our XRP and our Solana ETFs crossed $1 billion in assets this year out of Europe. And as you mentioned, smaller markets. So you can only imagine what that would look like in the US once those products are approved. But outside of let's call it the blue chip or the top five assets, we've seen interest in a whole variety of products out of the European market, whether it's our Aave ETF, Cardano, Polkadot, the list goes on. And so we think there will, over time, be a really healthy market for crypto ETFs in the US once investors have that opportunity to diversify their crypto holdings with different products here.
Yeah. How much demand would you say there is for those sorts of ETFs like beyond Bitcoin and Ether? Like, are investors asking for like Solana, Chainlink, or whatever, or are they asking for things like further down the list, or are they quite risk averse there?
No, I think investors and this applies both to retail and financial advisors. They've certainly been asking us about these additional ETFs that we're looking to bring to market. We certainly filed for a whole handful of them already in the US and have a whole other set that we're looking to come to market with soon. But part of that reason is because we're seeing interest from both our retail and our financial advisor clients. Obviously, the bigger the asset, typically the bigger the brand and the recognition, and that's true, I think, for any asset, not just a crypto specific asset. But we're seeing interest really begin to flourish as the asset class continues to mature and grow.
Cool. And then yesterday you filed for an Ondo ETF in the States. Correct me if I'm wrong. What was your thinking behind that? So like, why Ondo?
Yeah, look, I think we have a great partnership with the Ando Foundation, and we've seen a lot of the evolution of their use case for more institutional uses in here in the U.S. market. We filed for a whole set of strategies lately, including Ondo, Sui, Doge, as you mentioned, XRP, Solana, as well as two index products as of last Friday, looking to track the top 10 crypto assets globally. Um, and so for us, really, it all comes down to giving investors this optionality and this level of choice where they can express their views on certain assets and use the ETF as a vehicle to do so in a really, like I mentioned earlier, low cost, safe, and transparent way.
Okay. Um, and how does it work in terms of choosing which assets to focus on? Like, you- do you just sort of look down the list and say, yeah, let's just, go with these ones? Or is it you analyze um, sort of how big you think each of these tokens are in terms of like volumes and community? Um, so what is it that really sort of decides what you focus on?
Yeah, it's a great question. And it's actually one of the things that I like the most about our firm. We have a very strong research-driven approach to our product innovation efforts. And that applies globally, right? I think we have one of the best research teams in the industry today. Like I mentioned earlier, we are really specialists when it comes to crypto assets. And so we'll have conversations both from the product development side as well as on the research side to first decide what assets do we have conviction in, right? Where do we think that there's actual value that we could provide to our end investors through an ETP? And so once we have that short list, if you will, we'll begin working on those filings to make sure that we can bring them to the relevant markets where we think there might be investor demand. Obviously, in the US, the regulatory landscape hasn't been the simplest to bring all the different strategies to market. And so one thing that we're focused on is combining both the assets that we have this conviction in, along with what we can do from a regulatory perspective, and trying to push the envelope to make sure that we're bringing the best strategies to each market. But again, everything we do is centered around our research team. Adrian Fritz, he sits in Zurich. Matt Menace sits in New York. He's our head of US research. They are driving a lot of our product innovation decisions, especially when it comes to these single assets. And partially it's based because we have great foundation relationships as well. We're connected to the ecosystem directly. We get to hear from these organizations what they're doing, what their use cases are, how they're evolving, how they're investing on behalf of the asset, and how they're managing it. And we can form a really well-rounded view as to what should constitute an ETP in which market.
Okay. And what did you make of the workaround that was used to file like the Rex Osprey Solana ETF? Like basically this was a way of bringing a Solana ETF to the US markets without sort of going through the traditional 19B4 route that all the Bitcoin and Ethereum ETFs have gone through. Like what's your sort of view on that?
Look, I think it's a reaction to the regulatory environment that we're in, right? Issuers are thinking in as creative a way as possible to meet the client demand that they're seeing, right? I think uh, separate from this Osprey product, there's over 100 different crypto ETFs that are being reviewed by the SEC as we speak. And that just speaks to the demand that issuers across the board are seeing for different assets. It's not just a Bitcoin and Ethereum game. It is clearly much broader than that. And when you have this level of conviction from the industry as a whole, issuers like Rex Osprey are going to come up with creative ways of potentially bringing these assets to market in a near-term way. And so, I think we've seen over 125 million in assets raised in that product alone over the first couple of weeks, which just points to tremendous demand for Solana. Now, if you're a product purist, you might not think that it's the best structure or the best way to bring that to market. But it is, especially in a market rally like the one that we've seen over the last couple of months, great for investors that were able to access that market because they were able to benefit from some of that appreciation. So, needless to say, it's a creative solution to an ongoing problem that we hope gets rectified very soon.
Okay. And then what do you foresee as the next sort of major development for crypto ETFs? Is it generally more assets or new structures or something else?
Think it's all of the above. I absolutely think it's more assets. I get, like I mentioned earlier, I compare the US to Europe all the time. Europe is a few years ahead of us from a product innovation perspective. And our product suite in Europe has over 30 different single assets that are available, if you will. But we also have different structures. So like whether they're staking products, whether they're index products, thematic, I think all of that will come to the US in short order once we have some clarity here on what can be eligible and what cannot. I think the next phase, though, we'll have to see where these current 100 filings land with the SEC, where they draw the line in terms of what will be eligible and what will not, whether they're going to only be 33 Act products, whether 40 Act products, as we've seen, with the Rex product, continue to live on. There's a lot of open questions, but I think in one way, shape, or form, we will begin to see a diversity of crypto ETFs in the US, and we'll be able to give investors more optionality and more choices that are tailored perhaps to what they specifically need for this market.
Cool. And how close are we to seeing like multi-asset ETFs, say like Bitcoin Ether blended in a single product?
So a couple of those exist already, and we've seen some interesting demand from investors in the U.S. Like I mentioned earlier, at 21Shares, and I can't speak too much about our live filings, but we filed last Friday for two top 10 market cap weighted crypto index products in the U.S. One inclusive of Bitcoin, one excluding Bitcoin. And the idea here is that we're able to provide products that are live, dynamic, rebalance on a frequent basis, and really reflect the current state of crypto markets. And so we think the product we filed for has a lot of advantages for investors here, and it's in a 40x structure that is very comfortable and well known when it comes to US investors. And so we're certainly excited about working with the SEC on that approval and hope that that gets filed at some point in the near future.
Do you think those sorts of products would increase or decrease volatility? Like I know often historically you've seen a lot of assets trade in parallel with each other in crypto, like sort of everything goes up and everything goes down depending on the day. Um, have you like done much research into that?
Yeah, look, I think there's so many ways of accessing crypto markets still today, and crypto markets are truly global. That a handful of products in one geography, I don't think is going to substantially alter the dynamics, if you will, of the crypto market. Obviously, if the industry grows to a certain size and these products are a significant portion of it, that could all change, right? But in the near term, I think we're really excited because these products can just give diversified exposure in a single ticker to the whole, to let's call it the top 10 assets in the industry. And so, when it comes to the volatility, I don't think the profile will necessarily change too much overnight, but it's certainly something that we're keeping an eye on as the industry continues to evolve and develop and grow. Um, but yeah, long story short, lots of ways of accessing crypto. Different ones are right for different types of clients around the world. And we think this will just be an additional way or an improved way of accessing the, let's call it top 10 assets across the industry.
Yeah. And do you think we'll see ETFs that go beyond just sort of tracking the prices into sort of structured strategies, yield products, or sort of active management?
Absolutely. Absolutely. I think we'll start to see active strategies. We'll start to see covered call strategies. We'll start to see yield focused strategies, if you will. I think there's a healthy progression and evolution to the ETF landscape in the US that we'll also have to see, right, as investors broadly get more comfortable with different types of structures and kind of hand holding our client base through how to think about the different options that they're going to have, hopefully in short order. But those products will all come to market. And if the traditional ETF market in the US is a reflection, we expect to see a lot of demand for those strategies as well down the road.
Okay. And would you make the growing trend towards tokenized equities? Like in some ways, it sort of feels like the inverse of the ETFs because you're putting TradFi assets on chain instead of on chain assets, in traditional finance wrappers. So yeah, what do you think of that trend?
Look, I think it's potentially a long-term evolution of our broader capital markets ecosystem, right? And I think the Clarity Act and the Genius Act that were just signed a couple of weeks or a couple of days back are the first indication of a move in that direction. Once you normalize having stablecoin transactions or on-chain cash-based transactions, the next logical step will be, equities, fixed income, you name the asset class, also moving on chain. And so where I was personally very excited about both the Clarity and Genius Act because I think it is the underlying regulatory change that's going to unlock everything outside of the Bitcoin world and crypto. And so it's certainly a fantastic trend. I think ultimately what the industry is still grappling with is who can buy and who's going to use the on-chain assets, right? Up until now, it's been a limited set of investors that are able to access it. But over time, I have no doubt that that will continue to grow, and it will be a bigger and bigger part of capital markets more broadly. Forget just crypto.
Yeah. I mean, do you think crypto ETFs will ever be like composable with DeFi? Like the ability to sort of go between the two worlds much more easily?
Look, I think we're still at the early stages of in-kind creations and redemptions for the ETFs, which I would call the first step on that journey, right? At 21Shares, we were one of the first to file to approve our Bitcoin or Ethereum products to allow in-kind creations and redemptions. For those who may not know, typically the only way that crypto ETFs work today is that you need to give cash in order to create new shares of the product. But what we're asking the SEC to allow is for the ETFs to receive the actual underlying asset. So in this case, Bitcoin or Ethereum, and have that be eligible to create new shares in the ETF. And so once you have that composability between the underlying asset and the ETFs, you could see where the next logical step would be to go towards on-chain assets as well. But I think we're probably a ways away still.
Yeah. How much easier have the US regulators been in terms of like communication and getting things through um, over like the last year or so compared to like the previous administration?
Look, I think every administration is dealing with a different set of cards, right? And what I can say about this current administration is that they certainly have been moving quickly, and they've been focused on getting the industry the clarity that it needs. Now, none of that happens overnight, right? These are individuals that still need to go do their homework, understand and build a point of view around different, a whole wide range of different topics, whether it's staking, in kind, new assets, baskets, 40 Act, 33 Act. Like the number of things on the current administration's plate right now it is astonishing. And I think the fact that we're seeing all the support that we saw, at least for the Genius Act, for the Clarity Act, and then some of these potential approvals that we have coming up down the road, is a great indication of how there's been a shift in Washington broadly around crypto and how to treat the asset class going forward. I, from the very beginning, have really thought that crypto is not a partisan issue. If you think about where a lot of the innovation in crypto is happening, it's really coming out of Brooklyn or the Bay Area and California, traditionally blue cities, blue states. If you think about where the majority of miners for Bitcoin are based, traditionally in the South, in red states. So there's a whole level of interest, there's a broad set of interests, let's call it, across the political spectrum to support this asset class and to support growth and to make sure that the US is continuing to lead when it comes to crypto innovation. And so I think that the SEC has certainly been very, very supportive, very collaborative, and is doing their homework, right, to help regulate investors or protect investors in the US and make sure that the products that we come to market with are safe for these investors as well.
Sure thing. Now, on a slightly sort of different topic, do you have any concerns about the Bitcoin treasury companies that are sort of building up these large borrowed positions and whether or not, we're sort of creating a situation where if they were to collapse it, it could be pretty painful all around?
Yeah. Look, I think about this much more from a investor perspective and from a client perspective, right? If you were to buy a Bitcoin treasury equity, let's call it MicroStrategy or any other, it could be a whole broad set of them, versus an ETF. You're often paying a premium for the level of Bitcoin that you're receiving. And all that means is if you pay $10 into the Bitcoin ETF, you're getting $10 worth of Bitcoin in that case, right? Versus if you pay $10 to buy one of these corporate equity products, you're getting a fraction of that $10 worth in terms of return on Bitcoin. And so they're levered plays. They certainly have some risk carried with them. But they're a growing part of the market. And like I mentioned before, with the Rex Osprey situation, they're a creative solution to bringing exposures to market that have not been eligible up until this point in an ETF wrapper. And so over time, I think investors will traditionally gravitate towards lower cost, let's call it more direct access to the crypto markets like the ETF provide. But in the meantime, I think that these corporate treasuries are a good way to diversify exposures today, although they do present that levered risk, as you mentioned at the top.
Yeah, I mean, I had guys from Outpexi on recently, and they sort of explained that yes, because you're only getting a certain amount of, you're getting sort of less than what you pay for, but you're sort of betting that as long as more people come in after you, you'll end up getting more Bitcoin than you sort of paid for. So it's sort
Mhm.
of like each time this happens, you kind of need a bigger and bigger amount of people to kind of come in until I guess you run out of people interested in sort of making this bet, and then someone ends up holding the bag at the end of it. That's, I guess, my sort of big concern with that.
Yeah.
Um,
Yeah, I don't disagree. And I'm clearly biased here coming from an ETF issuer where you're getting one to one and there's no leverage, right? But there's different types of clients that want different types of exposure, is kind of how I would summarize that one.
yeah. Do you think there's any worries about like a systemic risk with this sort of thing?
Look, I think anytime there's a lot of leverage in the market, there's a risk of some sort of systemic risk like this. Um, But truly, I think for, like I mentioned earlier, there's so many ways of accessing Bitcoin, so many ways of buying and selling the asset class today, levered or not, for that matter. It's not like these are the only leverage play in the market either. That I don't think right now it is the biggest risk facing crypto. I think on the contrary, it's just another way that we're seeing clients come in and access the market. And when it comes to assets outside of Bitcoin and Ethereum, it's a creative solution to potentially add, providing access to other crypto assets in the US.
Cool. All right. Well, that's all we have time for today. I want to thank Federico for joining this episode. And as a reminder, the newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read the blog. Thanks, and see you next time.
Thanks all.